It's May 5th, 2026. This is the pre-market opening report. My name is Joseph Lackland. Thank you for joining me. It is very clear that the market is in a total state of complacency. While it has priced in perfection for the foreseeable future, despite the fact that the Strait of Hormuz remains closed and that tensions oscillate between escalation and de-escalation, we have a naval blockade that is active in the strait. Iran has its own blockade. Shipping continues to be disrupted. I read yesterday that there are over 20,000 sailors out there and thousands of ships that are simply unable to traverse the strait and get to where they need to go, whether that's in or out. The crude oil is at $104 this morning, 103, something like that. The Nasdaq is on the all-time high, pushing about 28,000. The ES is almost at 7,300, and the gasoline is the most interesting instrument of them all, holding at 371 roughly, and that is a multi-year high. We have not been that high since the start of the Ukraine war a few years ago. So, although the market is very lofty and the news headlines seem to have pretty much normalized the war and normalized the idea that the Strait of Hormuz can remain closed with nothing really affecting everything else, that this whole idea, there's something incredibly wrong with this picture. Well, one of these instruments is telling the truth, or more of these instruments, one or more of these instruments is telling the truth, and the rest of them are not reflecting the reality of the situation at all. So I'm very puzzled by this. I've really never seen anything like this in my entire career. Normally, with a massive shortage and deficit in the world supply of crude oil to the tune of about 13 million barrels a day, the prices would be much higher. The gas prices here at the pump in the Midwest are about $5 a gallon. That's high because we have relatively low gas prices here. Our gas prices are very competitive. They're almost double in other parts of the country, such as California. So when I see $5 a gallon here, I know that that's elevated. I know that that's high. The news cannot tell me that it's not high and I'm going to believe it. It also cannot forecast, like it did the other day, that gas prices are going to immediately come down when the conflict subsides. Well, when is the conflict going to subside? This has been going on for weeks now. It was supposed to be a few more weeks. Now it's a few more weeks after that. Now Kalshi and places like Polymarket are showing that the strait may not be open until July or August. This is absolutely unsustainable for the global economy to function. The economy will not function with the Strait of Hormuz being closed for another few months. And the idea that the market is on the all-time high while this is going on is even more perplexing than anything else. So we have a technical picture, the likes of which have never been seen before. There is no analog to this in history. We have never had a major energy crisis coinciding with a perfect utopia for stock index futures and ETFs and everything else that's related to an investment. So here's the crude this morning. It's at 103. It's still elevated. It could easily go to 110, 120 if it wants to. It's already shown its capacity to move 7, 8, 9, 10, 11, $12 in one day or in a very short amount of time. The volatility in crude is 7%. So we're moving 7% in crude. That's volatile. That is a extremely unpredictable contract at the moment. The gasoline is at 5%, but the gasoline has been rallying basically ever since the war started, and the crude gave back a good chunk of the rally. The gasoline did not give back as much of a percentage as the crude did. So the gasoline is the more elevated of the instruments that we're looking at here. Gold is starting to find some sort of bottom here. It tried to go down last night. There was no volatility, no follow through whatsoever. So now it's starting to crawl back towards 4,600. It is behaving like a risk asset, so it has been moving with the stocks. So if the stocks are going up, the gold usually goes up, but it has been weak lately. It does have the inverse correlation with crude, where crude goes down and gold goes up and stocks go up, and then crude goes up and gold goes down and stocks go down. But this has not been in lockstep. This was more in lockstep before. So we can see that the NASDAQ is making another all-time record high. We can see that the ES is almost at another record high, just shy of 7,300, but the volatility is compressing here. It's really not giving back anything. The overall activity of the market is extraordinarily low. This is maximum complacency here. We're at 1% moves every day on the S&P. The price is at the all-time high, so a 1% move is only 70 handles. If this thing moves 50, 60, 70 handles, everybody starts to freak out because it really just doesn't move lately. NASDAQ is a similar picture, 1.45%. This is record low volatility right now. So this thing is ignoring the biggest energy crisis that we've ever had, and it basically is saying that no matter what happens, it just doesn't matter. The AI trade is in full-blown mania. The market participants believe that that the AI movement is worth the price that's printing on the screen, that it justifies the valuations. I work with this stuff every day, and I can tell you that it's good and it's very sophisticated, but this is a little extreme. That this really does not make a whole lot of sense. So we're in this mode where the market is going to do whatever it's going to do. The Strait of Hormuz remains closed. The deficit is 13 million barrels of crude oil roughly every day. That's not making it to the global supply. This is accumulating and accumulating and accumulating. And even if the war were to stop today, we still have a massive deficit in the world supply of crude oil, and the production and distribution is not going to just go back to normal right away. So something has definitely got to give here. Now, how long the market can ignore reality is anybody's guess, because it's usually pretty good at that. It's been ignoring reality for decades. We have more debt than ever. We have seemingly more real problems on the ground than ever. And the market just continues to go up and up and up and up. And the crude oil now is going up and up and up, and the gasoline is now going up and up and up as well. So if everything continues to go up, then we're just eventually going to be priced out of everything. We're not going to be able to buy stocks, let alone buy a gallon of gasoline. And if the shortage continues, we might not be able to get gasoline at any price for a little while. And then the war would stop by default, because if they run out of gasoline, what are they going to use to propel the war into the future? So this is a truly extraordinary time to be alive, to watch all this happen. This has not made for the greatest trading. Volatility is low. Volatility should be much higher right now. I mean, even in the gold right here, the gold's barely moving. It's moving $8, $9 every 10 or 15 minutes. There's really just nothing going on here. This thing is just really drifting around. We opened, we chopped around for Asia, and now we're on a drift up to 45.85, up to the first temporary resistance here. So we've had like a $40, $50 move. That's nothing in gold. A few months ago, we were moving $50 every minute. So now we move, now it takes several hours to move $40, $50. We used to move $40, $50 in a minute or two. NASDAQ is a similar story. It's a similar picture. It started out and it basically just drifted higher all night, so nothing really going on. Now, if we look at the gasoline market's been drifting lower, so the exact opposite of what value the value instruments are doing. And we have some resistance at 371. We've come off. It's at 368, but you could see from the chart that this thing is really high at the moment. This is very high. It is not really giving back anything. If the market does start to give back some of this rally on the gasoline, it could be fast and furious. We could get another news event ambush sort of, cascade candle that drops it a few thousand ticks. I don't think that's going to happen, but anything goes in this environment. The crude oil chart is roughly the same as the gasoline. A drift lower, a brief touch into the resistance. The opening is the high right here. And 105 is definitely a shelf that we're bumping our head against. We came back down to 103. That was the opening range of yesterday's NYMEX. So that is the technical picture going in. Crude remains elevated. Gasoline remains elevated. The market's in the clouds. And what is going to happen here is really anybody's guess. I'm very curious as to how this is going to play out, because something has definitely got to give here. So that'll do it for today. I hope you guys are having a good day out there. Good luck if you are trading these markets. Keep your eye on the ball. A news headline, a Trump tweet, news coming out of Iran can change the shape of the market very, very quickly. And whatever narrative that was being put forth and whatever the market mode is that it had obtained at that time can drastically shift and completely turn around all at once. That is just the environment that we find ourselves in. So hopefully I will get some good script demonstration videos together. The action has been so slow and so drawn out that I have not been able to get a good video. I used to be able to turn this on and get a few trades at least in the first 20 or 30 minutes of Globex or Asia. And it's taken several hours for some of those trades to work themselves out. So there's really nothing going on in the market right now, and I want to capture some actual action. So hopefully we will get some more volatility. I will see you guys on the next video. Talk to you soon.